Hello everyone, and how's it going? I hope that you're having a fantastic day and a very profitable time in the market. If you're searching about Palantir and have decided to click on this video that you're currently watching, then chances are you're wondering about the same question that many of us are asking as well. Should you buy more Palantir shares now? And how far up can it go? So as we know, over the past few years, things have been weird. The job market has been looking ever more uncertain for many. The inflation, on the other hand, has also been melting people's savings away in many places that used to be deflationary. When every source of certainty is about to go like haywire, we must use that opportunity to take a step back and to remember that ultimately we are responsible for our own financial well-being. And in this effort to secure like a better financial future for every single one of us, we have to find the growth opportunities of tomorrow and to seize the ones that can multiply our capital exponentially, increasing the money available for investment later. So essentially, we need to find the golden goose that's going to lay us many eggs so that we can have more goose. And to many, Palantir is exactly this stock that they're looking for. So over the past few years, Palantir has become much more than just another tech stock that promises us blue sky future and increasing market shares in a blue water, subsector in exchange of almost unlimited funding and possible dilutions. So it is a major company that plays the role of a canary down the coal mine as far as the risk appetite of the market is concerned. It also has enough clout and mystery and a degree of sophistication around it to make the market curious about what does Palantir do and whether you should be putting your money into the company. And it also profits from people's tendency to follow the trend, or rather, it profits from the people's tendency to follow the companies that are follow the trends, that are themselves following people's own like desires or needs. It is a company that we can often view as, how can I put it, a representation of people's demand for NASDAQ or tech stocks. It's a little bit, in this regard, it's a little bit similar to Apple or Tesla. So the fact that Palantir may rise and fall with the tidal waves of risk capital is a limited but very useful, nevertheless, very useful stock to be kept around and to be, listed on your short list or on your watch list. And in this video, we're going to take a deep dive into Palantir and to see whether it still deserves to have a place in your portfolio. And also, even if it does, like in the absolute sense of the term, should you really have Palantir like right now, right then? So before the video continues, I just want to take a moment to thank every single one of you for showing up on my channel, and hope that you're going to enjoy your stay as much as I enjoyed like making those videos over the past few years, and that hopefully you're going to be able to take away something new from my content. So if you like what you see, please consider to like, subscribe, and to check out my channel for other playlists of the companies that I cover, including Palantir. So with that being said, I hope that you're going to enjoy my analysis, and let's get started with today's video. So Palantir, trading under the ticker symbol PLTR, had a pretty stable day in the market. So it reached a daily high of $23.83 and a daily low of $23.50. Over the past 5 days, the share price had a rather significant pullback, decreasing by almost like 6%, sitting right above the ceiling that later turned support level of $25. Of course, we're now kind of below that, but still, I wouldn't say that we have abandoned the $25 level completely just yet. Nevertheless, it seems that the share price is now way beyond the critical level of $20. But this is something that Palantir really had a very difficult time of piercing through. over the past year or so. Because personally, I do remember back in the days when Palantir was trying to go through like the $20 level and it just couldn't, no matter how many times it tries, because there was something missing of the bunch. And then eventually, that's no longer an issue because of Palantir's like own metamorphosis into something else, as well as the change in its own like fortunes, shall we say. We're gonna come back to these in a second, but for now, since we're talking about like the short-term price action, things are still looking mostly bullish. But when we're gonna talk more about like other measurements, you're gonna see that Palantir isn't always as like the it's not as encouraging as people may always try to portray Palantir as. Now, if we go into the long-term price action, Palantir has demonstrated its potential to grow significantly from $8.08 a year ago to $23.50. So the stock has experienced a very substantial increase of almost 200% within the last 365 days. And this performance reflects a very clear bullish trend in the market, especially when we zoom out. And it's worth noting that there appears to be a resistance level around the $25, much like when we were around the $20 level. These levels, in my opinion, seem to be like the psychological levels for people because they are exact numbers. They're multipliers of 5, much like the multipliers of 10. You know, when a stock goes beyond $10, $20, $30, there's always going to be some sort of hesitation right above or below that price point. So I think that what we're seeing now is no exception. The overall pattern seems to suggest that Palantir is one of the big winners of the current cycle, despite the fact that, the current cycle isn't as big or reliable or predictable as the previous one, with the Fed printing money in order to prop up asset prices. And it's been doing this for about 15 years. So with that era kind of sort of like behind us, we're now entering into some sort of new paradigm where the liquidity is potentially drying up, but Palantir has still managed to go higher. So this is in by itself a pretty positive sign. Well, positive sign for Palantir, but maybe in terms of like the global situation, it's not necessarily something to cheer for. And we're going to come back to that in a bit. So that's about it for the long-term price action. And when it comes to the options, the current price points for the strike prices are around the $26 and $27. And then later on, once those contracts expire, we're probably going to see 24 and 25 as well, depending on where Palantir would be by then. So the options are a very decent tool for people to either have an additional revenue stream or to have additional exposure or hedge against an existing risk for, and this is very important, for a limited amount of cost or a limited amount of potential losses. So looking at the trading volume of Palantir over the past few weeks, the current trading volume is around 43 million shares with around 30-day average of like 70 million shares. So what this means is that the market is now really showing some slowdowns in its drive to bring Palantir to higher levels in the short term while remaining at a very high baseline. Because Palantir trading at like multiple tens of millions of shares a day, this has been unseen for the periods before 2023, I would say. Nevertheless, at one point it did go way beyond like the 100 million shares a day mark. So for the time being, I wouldn't say that it's worth raising any sort of alarm. However, we must take the trading volume like what it's meant to be. It's a measurement or it's an indication that things are slowing down. There's the speed, the absolute speed, in other words, the price of a share, and then how fast or how slowly um, the share price is increasing or declining. So that sort of thing is very important to understand for a for an equity like Palantir, and in fact for any sort of volatile uh, titles, right? Because the reason why some people like Palantir is also because it's a volatile stock to trade, and in that regard, well, if you see that the volume is drying up, it may mean that the current trend may either be slowing down or having a major pullback before people come back up. Now, I want to briefly explain why that might be the case. Let's say the current volume is like 200 million shares for a stock that typically trades around 50 million shares. What this means is that there's a huge amount of people trying to buy up the stock. So mechanically, the price will be propped up. Now, if there's less and less people buying compared to the average, regardless of how like low or high the current baseline remains, it's still like the fact remains that as far as Palantir is concerned, we're probably going to see like a slowdown of its upward tendency, and potentially we're also going to see some pullbacks or even some sell-offs. So it wouldn't really surprise me to see that Palantir may start testing like the $22 level or even the $21 and the $20 level, because it has risen by so much in an environment where a lot of stocks lost a huge chunk of their initial value. So this is why, as far as Palantir is concerned, I would say that things are looking relatively good, all things considered, but it shouldn't be it shouldn't be outside of the realm of normalcy to see that the current volume could continue to dip, and that may trigger a new round of sell-off. And if it goes as low as like $20, in my book, it would still be good to continue buying the shares. So with all that being said, let's talk about like Palantir, the company itself, why people like it, what are the challenges ahead, and what should you do given all these information. So personally, I think that the reason why Palantir is popular is because people are fascinated by it. It is a company that doesn't explicitly explain what they do. It doesn't really publicize directly the kind of contracts or the kind of companies they work with. However, this is precisely what creates a lot of buzz. So you may argue that like the PR campaigns of Palantir, even though they're run indirectly, can sometimes be pretty successful. Of course, sometimes we can also say that we're just benefiting from the hindsight, right? Because a few years ago, many people were critical of Palantir. Many people were saying that this is not a company that you want to put your money in, and also it's maybe not a company that can sustain its, no matter how you look at it, like pretty large market cap. Okay, for someone who basically makes like dashboards, really like glorified dashboards for public and private entities who need to enhance or to make sense of their operations. So that's one thing. And then the other thing, of course, is the fact that Palantir as a company, regardless of what its reputation is or what do they currently do to bring money through the door, they're bringing enough money through the door to avoid any sort of significant dilutions. Of course, companies may also choose to issue more shares just because, right? Just because they want to benefit from, let's say, a hypothetically much higher um, type of price range, or because of ongoing inflation, maybe Palantir's price also increased, and then the board wants to issue, let's say, an additional like $10 million worth of shares or 10 million shares for like an X amount of dollars for people to subscribe on. Well, that's basically just free money, because you have to remember, as long as those shares have a certain value and that the company bylaws don't like necessarily forbid shares to be continually pumped in to the market, well, people can create a lot of shares out of thin air, right? So this is also something that we gotta remember, why Palantir is such an attractive company for many, is because at the end of the day, they want to be with a company that doesn't have an immediate risk for dilution. So what does dilution really mean? It basically just means reducing your own claim on the equity of a company, because they now need money. So they need to take basically everybody's equity back and to redistribute the cards. Okay, so this is what typically happens with companies that are really hungry, or companies that are really almost going bankrupt if people don't start putting money in like once again. So typical companies that may come to mind would include Mullen and Fisker, two EV corporations. Very different profiles, but the point is there. When a company is about to run out money, then they're going to ask for more money from their shareholders. And why shareholders? Because they don't have to pay it back. If they finance their needs with loans, well, loans have to be like paid back. Whereas the shares, well, you won't turn like insolvent if the money is not paid back to the shareholders, or if the shares don't go back like above a certain value. Like there's no such thing, or generally speaking, there's no such a thing. And then there's another reason why Palantir is currently doing quite well, is thanks to their capacity to, how can I put it, to surf on the waves. What do I mean by that? Well, it just means that Palantir is quite good at coming up with sound bites that people like to hear. For example, it used to be EV a few years ago. Well, nowadays it's called AI. And AI stocks are super hot, and much like the crypto tokens that are linked to AI projects have gone through the roof. Of course, right now with Bitcoin's where it is, maybe things have changed somewhat in that regard, but it's only in the relative and not really the absolute. So in the absolute, things are still looking quite good. So with that being said, what are the challenges ahead for Palantir? Basically, the opposite, like the reversal, the other side of what I've just mentioned for Palantir. So it's certainly a company that's shrouded in mystery, but it's also a company that's shrouded in controversies. They're working with entities that a lot of Silicon Valley companies don't want to work for, say the DoD or the DOJ, right? Any sort of law enforcement as well as NHS. So a lot of companies would shy away from those contracts because they may attract potential legal issues, whereas Palantir doesn't really mind. And in fact, this may have even solidified more like Palantir's dominance over public contracts. So the other thing is, how can I put this? The reason why they're popular right now is because of AI. The reason that they may go bust could also be for AI reasons. Meaning a lot of people put money into Palantir, and if they realize that, well, you know what, like AI is not such a cool thing after all. Like if that ever happens, then there's gonna be some issues, because by then, people who would otherwise be willing to buy Palantir would be on the fence, and then that's gonna cause the share price to drop. And then another thing that people may want to be careful with Palantir is the fact that Palantir is very dependent on public contracts. Now, public contracts, they're not always guaranteed to be distributed to the same company. In fact, some regulations may require Palantir, or sorry, rather the clients of Palantir, to switch the supplier after an X number of years. It's possible this law is in application in many parts of the world, right? So there's also that. So really, when you look at Palantir, you have to look at the company from many. So right now, the global markets are facing a complex interplay of factors that have the potential to significantly influence the equities worldwide. In this speculative analysis, I believe that the consequences of the global inflation, surging commodity prices, and decline quantitative easing, as well as the rise of inflation rates or interest rates, plus the geopolitical instabilities, are going to play a significant part. The increasing inflation rate has been putting pressures across the globe, threatening the purchasing power, raising the input costs, and impacting corporate profitability. Companies operating internationally may face challenges in managing rising production costs and also to sustain profit margins. Those dynamics could trigger market volatility as investors adjust their risk return expectations. The upward trajectory of commodity prices, including energy, metals, agricultural products, have been having far reaching implications for various sectors of the global equities market. The companies heavily dependent on these commodities may experience squeezed profit margins, potentially affecting stock valuations and investor sentiment. The reduction or the end of QE's quantitative easing measures by the central banks worldwide may have resulted in reduced market liquidity. So, this in turn could lead to higher borrowing costs for companies seeking capital, which may also discourage investment activities or will. The elevated market volatility plus the reduced investors' appetite may also continue to occur. Now, the central banks around the world are tackling this delicate situation of balancing the inflation rates with the economic stability and, if possible, growth. Central banks opted for aggressive interest rate hikes to combat inflations. Borrowing costs for companies have been rising, which has also slowed down business activities and also fueling the market's volatility in terms of the equity prices. Now, ongoing geopolitical tensions, including trade disputes, political uncertainties, and social unrests, will inject an additional element of volatility into the global markets. Investors may adopt a cautious approach, shifting towards safer assets, impacting the equities. Additionally, the escalating conflicts may disrupt supply chains, negatively impacting the performance of international companies. Given the interconnectedness of global markets, the aforementioned factors have reverberating effects on the US equities market. Companies with significant exposure to international market may face a lot of headwinds resulting from the economic slowdowns, disrupting the supply chains and the currency fluctuations. But nevertheless, the US market is known for its resilience, and the diverse sectors may attract investors seeking safe havens. So, really, the current landscape is characterized by global inflation, surging commodity prices, reduced quantitative easing, rising central bank inflation rates, geopolitical instabilities, and also ongoing lack of certainty regarding growth. While the US market may exhibit relative strength due to the safe haven status, it's going to remain interconnected with the global economic landscape. For long-term investors, these conditions may offer opportunities to identify undervalued companies with strong fundamentals and international diversification. With that being said, short term trades should be approached with caution because of the increased volatility and uncertainty. And also, we should be careful when assessing individual companies, sectors, or regions. So, having said all this, like, what is my overall opinion about Palantir? I think that it's a good company to be had in to be like included in your portfolio. I think that in terms of the quality of the company, it's pretty much one of the best in the industry, at least for now. And that at some point, over diversification may not be recommended. Like Palantir is probably a representative of what Nasdaq has to offer for the investors. In other words, you know how a lot of people would directly just buy S&P like SPY or QQQ because they don't really care about what Nasdaq shares they actually own. They just want to ride the train, right? So for those, then Palantir might be a good stock to own. It's a bit like if you want to buy Bitcoins. Yes, you can buy one of those Bitcoin ETFs, or you can buy MicroStrategy. So it's a little bit like that. Like if you want to have risk in the Nasdaq, well, then Palantir is your friend, right? In terms of entrance or the entry points, I would recommend to not enter all in one shot and to very slowly, gradually buy in over a course of 9 to 12 months. And then the holding period should be something like 3 to 5 years at least. And then in the meantime, if every time that you see Palantir shares dipping, like it may be start doing now, these might be decent opportunities for entries.